The VIX is now up 100% on the week, and that is pretty crazy. And should you overall be scared of this? That's what we're going to talk about today as we get into some technical analysis for the SPY Qs, Apple, Tesla, Amazon, Nvidia, AMD, and Meta going forward. Going to look over at AMC and GME and pay attention to the fact that not only is volatility going up 100%, but it is curling up on the weekly MACD down there into positive territory. And we also need to pay attention to the fact that the SPY is crossing down on its weekly into still positive territory at this point. So we may just experience some kind of pullback. We want to treat this very seriously, but I know some people out there must be like, oh, this is a rapid sell-off, this is a crash, this is the crash. That is fine. It very well can be, but we need to take things one step at a time and make sure we're paying attention to the signals and giving us that 1% chance that this isn't a stock market crash, if that's how I'm really feeling at this moment. So let's get into it. You're probably like really sick of this stock market just continuing to go up, and you're probably maybe even a little annoyed by it, but we're paying attention to any time this will curl back up. And I just want to say something about this right here. And the reason that I can't necessarily be overly negative, we are still within the channel. We are at the monthly expected move, and we still have 2 trading days left of this week for a big options expiration tomorrow. So let's just pay attention to what's going on. Let's get you guys some daily expected moves and see what's going to happen going forward. Now, is it really going to benefit us from look at these 30-minute charts and look at the 2-hour charts? Not necessarily. The big thing is we're closing at the low of the day, volatility held at the high at the end of the day, and that's a big difference between wicking out at the end of the day, because that means people were not moving their monies back towards the call side at the end of the day to suggest that this can bounce. But I want to bring something to your attention about tomorrow that can be very important, and that is this guy right here. Yes, today and actually tomorrow we'll be getting the GDP. So will tomorrow's data actually cause some people to have some short-term amnesia, and actually the market ends up going higher, right? We've seen many times in the past where the market has continued to go down and down and down, and then it goes rapidly down for one day, and boom, we see a big gap up the next day with some data. So GDP tomorrow, is it going to cause some amnesia and people are going to start to buy again, or is it going to fuel the fire even more? That is something we will have to see tomorrow, because we do not have the best signals, but we have great levels for you to pay attention to, because we headed directly towards that that monthly moving, or that monthly expected move. So the bottom side monthly expected move, we can see to the upside for tomorrow's daily expected move. Look how big the range is. So if you think this is going to stop these crazy moves, no, they are just getting started, and we are reacting to a level where we could make a head and shoulders. Man, there's tons of things that can happen from here. I just wish it looked a little bit better on these indicators so we could read into it. But for now, I just want to talk about 593.90 to the upside. So if we're able to curl up, if we're able to gap up, if we can gap above that level and get back into this weekly, remember, this is still our 68% zone. It's just really freaking far away. So that's going to be really, really difficult. I'm just going to let you know right now, you're most likely a negative gamma, as you are now below 600. So that was the big put wall. You start to get below 600 and flush. So we are in our buy zone. This is what we've been leaning towards the whole time, was eventually this daily is going to be able to get to one of our buy zones. It can even go a little bit deeper in this area. So we want to pay attention to that. If it's going to go deeper, well, we could look for this area right here, 578.66 to the downside for tomorrow's daily expected move. I just want you to seriously notice now you are outside of the monthly expected move, or right on it for the SPY. We have actually cut below the 50, which is massive. So how can you read into this? You want to read into it like, hey, this is really, really bad, but let me give myself that 1% chance, that 1% in me that says, yes, I see this, and it makes me feel really bearish. Let me just pay attention to the fact that we do have some decent support in here, and you overall still are in a positive trend. So we'll look out for signals, we'll look out for bounces. It would be nice to create a strong base before we head upward, but if by the end of the week, just to clarify this on the bear side, if by the end of the week we are crossed down on this weekly MACD, that's going to be a big problem. If you can't hold up at this, if you start to break through the channel, this might be the moment where you start to see everything crumble. One key indication that this is going to get really bad. Remember, the SPY was overall a little bit flatter divergence for the MACD. Not necessarily the RSI, but the MACD. But look at the Qs, and have they curled over? No, they haven't, which means, hey, you might have a little shot here. So we're paying attention to that. Now we want to take this very seriously. We want to understand that the Qs are really up high, and we're getting a difference in the market where the Qs are actually the ones kind of creating the 2-hour divergence that we've been paying attention to, while the SPY is actually just trying to consolidate for the next move higher and gets an uh-oh kind of moment. So we did confirm this divergence right around here. Now these are on some green bars, but you can see they're all below the 9-day. So all of these are pretty good confirmations. And what ended up happening later on, hey, we flushed. So your indicator did say that there was no upside move on the 2-hour. No upside move on the 2-hour, but we can pay attention to the fact that we are below a weekly expected move, and we could just make a move back into there as we have skipped some form of consolidation to break down. You guys know that when we do react to these levels, we normally like to create that right shoulder in some way. And when we skip that, we actually might go create that in the future. So we'll pay attention to this. Mainly what I want to do in this video is really state the fact that you're going to need to see more price action to see if this is fully going to continue. Right now, it looks really, really bad. So we could assume going into tomorrow, it could continue to be really, really bad, but we do get GDP. So we'll pay attention if that's able to speed things up to the downside even more, or if it's going to give us some reason for a bounce. And this is all trickery. I do believe if this is all able to recover and we end up seeing some kind of Christmas rally out of this, this might be the most manipulated market of all time. Now we do notice 524.12 to the upside, and we do have 508.82 to the downside. So some good stuff there, and we'll see if this daily is ever able to kind of cross down even, right? The Qs haven't even crossed down on a daily MACD just yet. So this can really get ugly fast. And good thing for someone to point out our pink line down here. This pink line down here is 492.28. That is the top side move for the whole year of 2024. And so you have a 68% chance to land right in here. We talked about it this morning during the live show. You have a 68% chance to land right here by the end of December. And it makes the most sense. This is the most probable area to land. It's just very, very small. So take that into consideration. But hey, you're starting to get some downside. If you can curl over on this MACD, you're already in the crazy area where you can see a 32% chance to get more craziness to happen. Let's see how GDP shapes up in the morning. Real quick, the Dow just taking an absolute crap outside of this, and I'm really wondering at this point if they're going to do something funky to get the Dow back up. I am, because we skipped any kind of structure to really have that liquidity to continue the downside. Now we are ending a lot of these at the end of the day at the low, so take it very seriously, but be open to the fact that where is the Dow? It is by that center line. So I'm still saying, hey, this is closing at the low of the bar. Volatility is popping. It's most likely going to continue. We're going to talk about volatility later in this video. But if this does turn up for whatever reason, what is the most likely thing to happen if this MACD crosses? It's going to test the high and go make a new one. Everyone calling me a perma bear out there, hey, that's perfectly fine. I still will talk the exact same in every single video. I will give you both cases. Right now, this looks very, very ugly. This easily can be some kind of stock market crash, but we can notice that if this is going to be some rigged behavior, then we're probably going to see another upward move. But if I was holding volatility calls, I'd probably feel pretty damn good right now. And the thing is, if this is going to continue to get ugly, you still have some potential for opportunities for downside. You do have a weekly for Apple that's not even close to crossing just yet. You have the daily scale that hasn't even crossed yet. So if this is really, really, really going to be some kind of stock market crash, I'm not seeing enough to really convince me that this is going to just give all of this up. If anything, I'm just seeing, hey, this could be our pullback moment that then curls up into positive territory. That's how I want to treat this. And if I want to go short here and stuff like that, I can do that if I know how to manage my risk. And then I can say, okay, if that continues to crash and continues to crash and I never see this daily curl back up, hey, I can just hold on to that position for an extended period of time, right? So that's what I mainly want to be talking about in this video, is the fact that a lot of things are tearing down very quickly, but we're noticing things like Apple still haven't even crossed down on a daily MACD with no divergence above it. Remember the SPY and the Qs, they don't have the daily divergence either. That's why we have to pay attention if the weekly crosses by the end of the week. Not today, not tomorrow. By the close on Friday, that's when we want to be paying attention. But it would be great for Apple to turn down like this, get everyone nice and bearish, and then you're the one paying attention to the other side of the coin. Even if you're 99% bearish, bearish with today, you want to treat this like, hey, let me give you that 1% chance that this could go higher. That can really save you from saying, oh, I don't really care about this MACD curling up down here. It's still going to go down, right? I'm still very bearish. No, if this MACD curls up and we see this curl up, it does mean test the high, go make a new one. If that is in positive territory, that is the most likely thing to happen. Okay, so we're going to pay attention to that going forward. For Apple, we did have a 2-hour signal for this, so the signals were there, right? I wasn't able to put aside some time to come back on the live show, but we have the signals and we were paying attention to this. This is the signal that we mentioned yesterday, and guess what? That confirmed and it kept going. So this can easily react down to lower levels. We can see if that's able to catch a bounce in some way, but if this is going to continue, you might just keep seeing it fall through the floor, and this doesn't necessarily mean I want to be chasing anything to the downside. I just want to see if this can actually buy itself back up. Honestly, at this point, from the talk from Jerome Powell, I did not necessarily hear too much that was different, and that's why I'm kind of speculative. I'm kind of skeptical of this overall move down at this point, but I'm going to treat it very seriously, and this is why I took all of my risk out. You guys heard me take the trade with Nvidia last week, and I said I gotta take my risk out. I'm gonna take my 70%. You heard me take that AMD play yesterday, and then I said I gotta get my risk out because this is too much going into FOMC. We have too many things way too high up that they could flush at any point, and that's what we were talking about with Tesla, right? We were talking about with Tesla the fact that, remember when we said one day you're going to start to see a couple days in a row where you might drop by 10% and 10%. Well, there's your 8.28% drop. Has that even crossed over the MACD yet? No. So can this go further down? Yes. You will most likely experience bounces unless we actually are experiencing a black swan. What we want to pay attention to for Tesla is the fact that the 2-hour doesn't even have divergence. So anytime this 2-hour turns up into positive territory, it can go test the high, go make a new one. So just pay attention to that. But if the signals remain bearish, then you remain bearish. If the signals flip up and go back to bullish in positive territory, you got to go back to the bull side. And that's just something I wanted to say. I'm not trying to convince you to catch a falling knife. I'm trying to convince you to do what you're trying to accomplish from this channel, right? You're trying to learn how to be accepting of what your indicator is telling you. Right now, we don't have divergence. If it wants to keep dropping, keep dropping. I have no risk in it because I know that the bearish signals are holding. If it wants to flip back up to the bull side, awesome. Then I have to become a bull again. And that's just the truth of it. Amazon giving you a nice rejection divergence on the 2-hour. If you don't like rejection divergences like me, you're probably looking at an hourly and you're seeing a cross down really, really close to the center line. And if you were waiting for that to lose the 5, you even got opportunities here, 229.76, that cross down and flush, right? A lot of things flushing over here. So we'll pay attention to it, right? But for the most part, on the daily scale, what are we? We are extremely bullish. We were looking for some kind of big drop, and now it's like everyone is surprised that it's happening. We were talking about this seeing some kind of dramatic drop. Now it is happening in very dramatic fashion, very, very quickly. So we're paying attention to areas right away, but this actually could leak down to lower levels, right? Because it is so fast, you haven't even crossed over this MACD, you could end up cutting through a lot of stuff and before you're able to actually curl up again into positive territory. But if this remains positive, I really want to get this to hammer home to you guys. If you have MACDs that are extremely positive and you see a few days of dramatic price action and then you start to coil up a little bit here and then you end up turning up, we end up turning up into positive territory, it is a signal that says you can test the high, go make a new one. We will keep you updated. I will try to go live as much as possible throughout the next couple of weeks to pay attention to this with you, but I just want you to keep a level head here. You are correct to be bearish right now. You are very correct to be bearish right now, but I want you to leave yourself that 1% chance in case this turns back up. If it doesn't turn back up, congratulations, remain bearish. But if things start to cross up on daily MACDs to the upside when all of this is said and done, I really want you to be paying attention to that, and we can watch for 2-hour signals that we see here just in the opposite direction, which means if this drops, like keeps dropping, then you bounce, then you keep dropping, and we see that, hey, we're going to be calling it out on this channel. This is a crash. This is terrible. This is awful, and Nvidia is holding above where it was just yesterday, right? So I'm paying attention to this because this 30-minute MACD did actually go a little bit positive there. We were able to retake the 5 for a moment. You notice when you lose that, bad things start to happen. So pay attention to your 5-day moving average. But if this 30-minute can whip up, where is it? Positive territory. You're already noticing a little bit of positivity for Nvidia. Maybe it's a reaction to Micron earnings. I'll have to look at that later on. We'll look at that tomorrow morning. But I just want you to see how this is still heading down. So we should assume that this can head lower. And if it can, we can pay attention to our key levels, maybe at 125, see if any divergences show their head around those areas, right? That's what I really want to be doing. The 2-hour here was able to confirm up. And so that tells us what? Well, it tells us that you're going to bounce, but what did we say yesterday? Watch out, the likelihood for a lower high is very, very high. It is higher than doing this. And we mentioned that yesterday. So this really should not take any of us by surprise. We were waiting for this kind of drop. I was starting to get to points where I was like, it could happen any minute. And then I was also even telling you what I was doing with my money, which was, hey, I'm going to sit on the sidelines and let today play out and see what happens. And now I just get to see what happens with no loss, no gain, nothing going on to my portfolio as of right now, because I can sit back, watch the fireworks, and then make a decision once all the craziness is done. And what did I tell you about AMD? This is why I do not trust AMD signals. I really don't. That's why I said, hey, you guys can have fun with it and try it. Make sure you're managing risk. That's why I took a second at the end of my live video to say, today you have a massive event. You have to be managing risk throughout your day. You have to make sure that these things are remaining curled up. Because if you just paid attention to when this crossed over, it crossed over right here. That saved you from 124. It saved you an extra 3 points by the end of the day. And that can be a big difference when it comes to options. So we're paying attention to it. Now from this area, we see we're violating those divergence points. So this can continue. Remember that the 2-hour was able to cross up. Now it's crossing back down. That can continue. It is saying negativity is the most likely thing for tomorrow. I want you to be open to paying attention to the GDP in the morning. But we'll just notice that the daily, hey, if you're really looking for the good signal, is if the daily was able to curl up, the daily never curled up, right? That's why I'm saying to a lot of people throughout the day, I'm just like, hey, let's just zoom out for a second. What do we really want to pay attention to? Well, stocks are really, really going up way too fast, and we're probably going to see some kind of waterfall of selling, and then we get the waterfall of selling, and it's like everyone loses their minds. I hope you guys aren't losing your minds out there. I hope you understand that this was always a risk when you get to these extended levels, and then all you need is some guy to come out and say something, so then they have an excuse to push the button and sell everything on you. And that's something I want you to pay attention to, because if you can pay attention to the moment where you need to manage risk, you can be completely out of them taking your money. And that's a big point to this. But we really have to see more from AMD to really make an assessment on it. As I go into Meta, we're noticing that that's crossing over today. That is crossing over today. Why you should be more worried about Meta is because it has an actual weakness in momentum signal, and it is saying that this is definitely going to continue. Isn't that pretty crazy? But what were we always leaning towards for Meta up in this area? A retest of the breakout area, and you have that right now. So be open to the shorter time frames being able to curl up from here, getting some kind of bounce. Be open to the fact that the 2-hour is still by positive territory, and if that's able to go positive, the most likely thing, even if you want to pay attention to a cup and handle to the bear side, but we'd probably want to pay attention to the fact that, hey, this high's not too far off. We got the reversal signal. Look at that 2-hour. Hey, able to cross, solid confirmation below the 5. Keeps dropping, keeps dropping, keeps dropping. What is the most likely thing to happen when you see this pop up at extremely high levels, when no one thinks it can fall down? Then the daily crosses, okay? So this is a 2-hour signal we were paying attention to. You see the divergence on your MACD, you see the divergence on your RSI, and that's what we want to be paying attention to at key moments. And this was a key moment because you had FOMC, and you even made a little micro that we were kind of talking about, right? We were talking about this maybe slanted head and shoulders going on for Meta, and that actually proves. So the reason you have to treat this very seriously is because the daily is crossing over, but I want you to pay attention. If this 2-hour crosses up, that would make me have to manage risk for a second. And then if that just curls back down, okay, awesome. Now I have a great position. I can reposition myself with a bunch of money I just made from my shorts. And then I can say, okay, thank you, thank you, thank you. Now keep going down. AMC and GME, well, if you remember, there was Roaring Kitty who actually posted at the end of the emojis was a fire emoji, and then a cheers. So we want to be paying attention to that. We want to pay attention to the fact that this 30-minute is close enough to positive territory that could curl up. Something I am more leaning towards is AMC actually going down further and creating a little 2-hour divergence here. That way we have a very strong base going forward, flushing people out right before a big moment. I'm being genuine. I think that a 2-hour divergence here is what I'm really looking for. And then I'm looking for a move to take us outside of the weekly next week. And I think that can easily happen, or at least it is having a better chance to happen with what's going on here. Now with AMC, you did have a signal that said, hey, the 15-minute is showing weakness where? At 437. This is why we have 437 on the chart. You notice there is divergence right here on the 15-minute, divergence on the RSI and MACD. So you should have known when this crossed over that the risk was that this is going to flush. All right, and now you're waiting patiently and seeing, hey, can the 30-minute curl up first? Okay, it didn't. Okay, let me see how low this is going to go. Is it going to create a divergence? Okay, that completed. Now I can make a decision. That's how I want to treat this. This is trading like water. GameStop, very important to understand that this is curling down on a 2-hour, but it's in the last bar of the day. So what we want to go is a little bit deeper, go into the 30-minute, show how that momentum said, hey, we're weak, we're weak, we're weak. We never got the confirmation of the next move higher, and you knew that they were going to fight the stock at 30.59. And I was very clear with saying they are fighting GME more than they are fighting AMC. And I pulled up the data to show you guys that as of yesterday, they started fighting GME more than AMC. So what happens to GME? It sees more downside than AMC, 8.67%. That should tell you a lot here. It tells you whatever is going on above this block of price action, they are scared of. So be looking for when the price action gets above there. If this 30-minute curls up, hey, you're still in positive territory. That would be a signal you really want to see, because if you're able to hold that, then you can actually confirm up the daily. Look, this thing was confirmed up all day until Jerome Powell talked. Now it is rejecting. This is a very good rejection bar, so likely to continue, but we'll see if that's able to hold true. Because this is still in positive territory, maybe that only holds true for a little bit. Anytime that daily turns up, we have daily momentum with us, and that's when I'd be paying attention to GME. Oh my goodness, look at that move from Volatility. It's so big. Okay, well, the weekly is what I want to be paying attention to, because that is curling up. That is the signal we were looking for things to start to get really ugly. And so that is showing as of right now, but you have to understand this has 2 more days. Look at the right side over here. It has 2 more days of not necessarily price action, but readings that will tell us if this is actually going to confirm. I want you to look at the past when we did see that huge volatility come in. Well, what ended up happening? We ended up subsiding that on both weeks. Okay, both weeks we actually came back below this. So if you start to see this wick out and come down, that's when we need to be watching for potential reversal signals from stocks. Now at this moment, this is the trigger we were looking for. We were looking for that massive volatility, and that is something to be paying attention to. It means this could be a crash moment. It genuinely could be a crash moment. That is what the signals say now. We have to see what they say in a couple of days. You'll notice that the daily was able to go positive. So going to make that divergence I was leaning towards, ooh, that's not the most on the table anymore. But what is on the table is a percentage thing that we know about volatility. Now, this is a massive upward move from volatility, but I'm going to say this stat anyway. When volatility is up by more than 10% in one day, you have an 85% chance to see a down day in volatility and an up day in the SPY in the next 2 trading sessions. We get key data in the morning tomorrow. A lot can change by morning. Let's see if it does. Right? We're talking about if people get amnesia from today and just see the GDP tomorrow and they're happy with it, right? They're just still digesting the data. You have to give it, or not necessarily data, I guess data, but also they're really digesting Jerome Powell's talk. So you have to give the market a couple of days before you can really see what it's doing here. In a couple of days, you could actually see these crash signals confirming. In a couple of days, you could see them completely unconfirmed. So let's pay attention to it and just know that over the next 2 trading sessions, we have an 85% chance to see an up day in the SPY and a down day in volatility. That does not mean it has to be some rapid down day for volatility. It could be one that is more consolidative and you close the day right in here, right? We could just have an inside trading day or something like that. So just pay attention to it. But it would suggest there's an 85% chance of that. If volatility is just going to come in and come in higher, you most likely are going to see a gap down and you're going to start seeing this flush even harder. Because with this type of move from volatility, this is where I put a blip in that 85% chance thing. This will continue if we're crashing. It will continue if we're crashing, and you will close at extremely high levels on the VIX by Friday. And that's what we need to keep in our brain. So overall, terrible day for the market, absolutely garbage. But was it really that much different than what Jerome Powell has said before? In my opinion, no. Do we have chances for bounce? Well, we're at a monthly expected move, which means 68% chance just to do that by the end of the month. You wanted to buy some room for a Christmas rally. You might have that room now. Now, we don't have reversal signals in here, so we will be paying attention to further things, further price action to really see what shapes up here. But just note that you have GDP in the morning. So treat this very seriously, but note that we have 2 more days in this week where we could see some fishy things start to take place. And then maybe we want to be paying attention to next week. So thank you guys so much for watching this video. We will gain some more ground. We will gain some more understanding. We will gain a better perspective after a couple more days of price action. And that's what I want you to take away from this. If you're confused by this in any way, well, we've been talking about how the Qs are just asking for a waterfall of selling. The markets are asking for a waterfall of selling. Tesla, all these stocks are asking for a waterfall of selling. And then it happens and we're all surprised. So I just really wish you luck in your trading going forward. I really do. And I hope that maybe if this did beat you up a little bit, I am sorry to hear that. I'm genuinely sorry to hear that. But I hope you can take something away from it, which is manage risk. Okay, managing risk is going to be the name of the game. We said that a couple days ago. This week is going to be the most important week to manage risk. So hopefully a lot of people were doing that in their trading. Thank you guys so much for watching. Thank you for liking and subscribing and all that good stuff. I do appreciate you guys being here, and we will open up tomorrow morning, see GDP together, and have our live show. All right, guys, peace out.